Good morning, good evening, good afternoon, Cryptopocalyptics. Welcome to yet another stream for Cryptopocalypse Now. I'm your host, CR, and let's drink some tea. As you can see, it is early morning in the morning for me. I'm foggy, but never groggy. How is everyone doing? I hope you're okay. If you're tuned in, make sure you drop a message in the chat to help the algorithm know that you would like to make some money and help others do the same. Rainy weather over here. Very calm, soothing atmosphere. And I think this is kind of like a wind down time for a lot of you guys. It's like midday, you're starting to come off of that coffee, and and also you have the end of the CPR looking right at you. Now, I briefly mentioned this a couple hours back on YouTube about how you should be paying attention to observing what is happening here on these charts. And we have yet another extremely thin compression happening. And as you can see, volatility has, so let's get rid of this, the Lego blocks for now. Let's take a look at the chart. It is consolidating, it is coiling up for a big move, and it would be nice to know which way from here. Now again, a couple of disclaimers before we proceed. Greetings, Nacho. Welcome to the stream. A couple of things before we proceed. A couple of small disclaimers. If you're a long-term investor, or a hybrid investor where you dabble in the markets a little bit, I think your hybridness would appreciate the day trading opportunities that are always here, that are always profitable. But as for you long-term guys, as you know, this channel is a little different from all the others in that we don't really care about where price goes from here. We don't speculate. We don't tell you to buy spot and hold. As a matter of fact, this is a trading desk, and I'm kind of like the solo frontman for the operations. And when I stream or post video analysis, this is mainly just to assess directionality so that you can not get liquidated and trade in the direction that the market is pointing to. So for you intraday guys, it's going to be very interesting over here. For you long-term investors, I don't know what to tell you. Personally, I remain bearish for the time being. However, there's some good news, and this might be another trap. So let's start with the good news, and let's get into the positives of all of this. Now, we're way too zoomed in to understand or see anything on this chart. So what I like to do is I like to go over here, which is a monthly chart. Happy October, by the way. Sorry. This market cracks me up. I'm up by 0.3% from last night, and I have been running my ladder on tactics to much success. The day draws near. I am officially looking for beta testers to evaluate the new code. Everything else that you remember from Poet is going to be in this version, and so there's a little facelift, but functionality wise it's just more stable and updated to the latest and greatest API endpoints for Bybit and OKX for now. We're working on Apex and a couple of other surprises along the way. But I think if you're on Bybit, or if you're struggling with geo-blocking or KYC or anything like that, I think you should get on Bitunix. This is the exchange that I have been recommending lately and using myself. As a matter of fact, I'm test driving the copy trading module on Bitunix to much success. I'll share the details later on at some point. Maybe you can join one of the board member seats in my 1% club on Bitunix. Copy trading is exclusive to sort of like a network of affiliates, anyone who signs up. But all the stuff that I'm showing you here is going to be reflected on that account as we trade that seriously day in and out. So 12-month, these are your settings, okay? Now, we had a little rejection, and you know, that downfall, downspill, downward price action scared a lot of people. It prompted much speculation. It prompted big name analysts stepping in and saying that they wouldn't want to be shorting here, or they wouldn't want to be buying here. And so just a little morning thought over here. I still find it incredibly peculiar that many of the Twitter accounts are claiming to be trading spot, but then they show their charts that are like perpetuals. But then when things go bad, they go back to spot and they say, oh, I have a bag, I have nothing to worry about. You never see people losing their accounts, getting into shakeouts or anything like that. The spot claim is sort of like the safe haven for a lot of these pseudo analysts or traders. But I digress. Anyways, yeah, spot trading, your bag is safe. Okay, moving on. What are you actually going to do as a real trader from here? So you're at the ceiling of a yearly resistance. So while we're looking at a monthly candlestick chart, our settings are once again set to 12 months on DSR, which means all the pivot levels that we use, the CPR implementation for pivot levels that we use, as well as things like our proprietary assessment of volatility. As you can see, the sigma sign is on this, which is it's indecisive. The market hasn't really taken on a direction from here. So this is the first in the line of there was another one right here. There's a sigma signal right here. There was another one right here. and a couple of them over here. So these are the parts that it basically tells you to wait for a confirmation, which I don't really like that, because that's another one of those fallback terminologies where if you don't want to be made a fool, you kind of say, I'm waiting for a confirmation. Okay, fair enough. But I'm just telling you that the sigma in our trading system indicates that there's lots of volatility that's expected post print. And so that is exactly what we're seeing. We have recovered halfway to the upside, and we're printing what seems to be a doji of sorts. Now, there's not really much resistance here, but I wouldn't be surprised if we continue to see sideways consolidation, much like we saw that happening over here. 1, 2, 3, 4, 5, 6 months of sideways price action. But this segment, I remember, was very profitable for us. We waited a long time, but there were so many great setups within this little window over here for the duration of mid-2024, and sort of still had a couple of good trading setups over here before the pump. And similarly, we are looking at kind of a repeat of this consolidation, I would say, because for the most part, all these candles are equal in their closing price. Don't really care about the wicks, but if we were to assess wicks, we know there are basically a couple of rules here that we need to take into account that stem from classical sort of interpretation of what price action is doing here. And so in this particular consolidation, if I turn this off, if you're zoomed in on lower time frames and you're worried that, you know, this is the start of the bear market, you should be. That should always be in the back of your mind. But at the same time, I'd like to point you to this one simple fact that we have just printed a higher low. This is a range low so far, but we're mid-month, we're still printing, and we still have till the end of the year to truly see if Bitcoin has topped out here or whether it has more juice to go up. Now, technically, based on this breakout at 100K, basically. Now, the reason I say this is a breakout is because we had a pattern over here. Now, I talked about how this loading sign, this is sort of like a pending breakout resumption continuation signal over here at about 142-ish, right? And that's because based on just the overall classical, like I said, structural map of what price is doing here, we can easily assess that 100K is a sort of psychological breakout, and we recently had a retest, a successful retest so far, with the bounce being an early indication that maybe that level held, and now it's able to push us further up here. So my advice for you guys who are on the extra cautious side and you feel a little swingy, maybe, right? You know that swings don't really allow you to. I mean, you can swing from here right now. You just have to place your stop loss at the low and assume that that was the bottom for the range. See how many contracts you can get with a $15,000 window. I wouldn't count on making any significant money going for a swing over here unless you are a degen who wants to risk all your net worth and Not just any net worth, but like multitudes of millions of dollars for you to even begin to feel anything tangible here based on risk. So if you were to risk 1% of your account for a swing, that's pointless. You might as well just wait for a new CPR open, daily open, leverage up, and see where price is going, and get it over with quickly. That's my opinion. So the breakout over here, I'm gonna take you step by step through a very simple process of understanding what that is. So you see this level over here that's held. This is a highly consolidated, highly active area that price usually comes back to. It comes back to the apex, or the breakout point of whatever the previous breakout was. And for the most part, if you go to lower time frames, this is why holding positions is not a good idea, whether they're losing or winning, because price will always come back to your entry point eventually. It comes back to the breakout point to retest to see if it was indeed a breakout. So if the breakout point holds, price continues to go in the direction that it was going from the breakout. But it always looks back. It always looks back, and most of the time it comes back to reaffirm its stance. So using the low of this candle to the point of the actual breakout over here that we just mapped, we just hold shift. And if we bring this little magic stick over to here, we can see that we get approximately like this 140 level. On the bullish side, like I said, we're starting with the good news. And just to reiterate, just to repeat myself, the good news is that we are intact bullishly, as we have posted a range low, but a macro higher low. And this is still a consolidation point for many. So going back to weekly, for example, we can see that using these low points over here, 16, 24, we got 50, got another 75 over here, and even in the mid-range category over here at 98, 100K, this wick is still a higher low than all the previous lows in this trend. So arguably the trend is intact. But trends, as you know, the way they work, the magic pill here is that it would be to catch the reversal before you can actually confirm that it's a reversal. True? Because if you can confirm that this is something that is starting to look like a bear market, but you don't have a classical interpretation backed proof that this is a reversal, which would require basically a candle that is much lower than this macro low at 73. Now, for good traders, we don't really need confirmation based on these classical interpretations of price. This is for like the beginners who read books, and there's nothing wrong with that. You have to start somewhere, but eventually you have to realize and not analyze. You have to formulate your own sort of understanding of what the market is trying to do here, based on psychology and nothing else. So over here, the good news is it's a higher low, it's a range low, which is no problem because we sweep previous highs and we sweep previous range lows all the time. So technically this is still within a very formidable sort of this can happen, right? And then the breakdown can happen. The breakdown here is what I think a lot of analysts would simply look forward to, a pattern that they want to see that is going to look like a head and shoulders. So if that happens, if we drop down to 85, let's just say, trend is still intact. So this is for you long-term holders. Depending on where you bought, you have nothing to worry about. If you bought here, you have a lot to worry about. If you bought here, you have very little to worry about. If you bought somewhere here, you better start assessing or maybe reallocating, depending. And so you're hopefully an active portfolio manager, because if you're the type of person who wants to be able to say that I just set it and forget it, then feel free, be welcome to watch these videos and more as a sort of like nothing to do, but it's good entertainment sort of thing. There's no harm in that. But if you're serious, you should be considering to maybe offloading your position a little bit into USDT if you're into Bitcoin and things like that. So, but this is not a video on portfolio balancing and reallocation and optimization. This is more of a intraday take on what's to come in the next few days for people who actually want to make money, and they would like to know whether they will make money or lose money in the next coming few weeks. So this is where I come in. This is sort of like my specialty here. So because of this fresh dump, it is hard to say that based on this one single candle that we have chosen a directionality here. Not enough fear has been injected into the markets, but confidence has been shaken here already. I can see that the market is not as eager to keep up with the rebound. And so two thoughts come to mind. One of them is, and it's all based on questions. Is it a dead cat bounce? Now, dead cat bounce is when you drop price, it looks like it's bouncing. Everybody on social media calls for a V-shaped recovery. Even though there isn't like even the left side or the right side of the V. It hasn't even happened yet. This is just the beginning of a much bigger dump, from which we will talk about V-shaped recoveries later. Like, this is a blip on the map. And so dead cat bounce looks like this. Now, to me, what's interesting are the closing prices. And so far, the close, even on this bearish candle, is bullish, because it actually closed above the previous pump candle again. And so we have one more on the weekly that's in progress. And my recommendation here, if you really, really want to catch a juicy, volatile sort of midterm trade here, is to wait until the end of the week. Oh, right? But I want to trade now. But skipping most trades is how you, A, maintain your sanity, and B, how you actually make money by not over trading. So that's option number one. Just to get a few more data points after a significant move to see if a buying opportunity is around the corner or not. Now, obviously, I can, draw things over here and map out levels. But those levels sort of they may change, the system may flip the script, and you have to go all in and go long. That happens, for example. Right now, sentiment-wise, it's for sure pointing down to the 94K range. And so let's get into the specifics now. Now that we're done with the speculative sort of philosophical side of reasoning here, we can actually switch back over to our monthly chart, bring in DSR very quickly, and I'll show you what's happening on Armageddon as well. There's very important information there. But for the midterm guys, this goes back to a few of my posts from time ago, where it's good to keep track of YouTube community page, because I do, if I forget to do it in Discord, because I don't always have access to Discord, but YouTube community page upload is very easy for me. And so over here at 94 is our next level. And the reason I'm saying that it would be nice to tap into this level and still be bullish for a complete flush out is two reasons. One, because ever since 16K, we actually never came back to retest it. And if lower time frames act and behave in the exact same way as higher time frames and vice versa, then we know that lower time frames give us a good understanding of what can happen in a given time period when you have enough of these pivot opens. So 3 years of non-stop trending. Each one of these red and green blocks is 1 year. 3 lines, 1, 2, 3. There must be an inflection point here somewhere where we will reverse to at least retest one of these levels. And the first one that's in sight immediately, that we can actually see, that is feasible, that is within reach, is 94, 93.8. You can actually look at what the specific number is. As a matter of fact, if you learn how to trade the system, you can actually go out there and sell levels to people, and you'll be right like 95% of the time. And you will tell everyone, see, I told you. And they'll say, how did you know? And it is dumb simple. You follow what the system is printing. And so a trailing stop is right here. That's another reason for us not to really panic too much. But it starts with the price, and price is starting to behave a little erratically. The lower time frame outlook, I would say that this thing looks exactly like what it looked over at this level over here. So as you can see, when we started trending towards it, we had a bounce right here, and that was back in 2021. And we had a good retest, after which we had a significant bounce. And that's how you would get to this level. You have to grab some liquidity from the bottom, because you cannot simply keep attracting buyers at this level, thinking that anyone is crazy enough to come in and step in and liquidity will pour in and start. It's just not a good level. It's at a premium, and shoppers are smart. You know, we have to give credit to people and say that nobody wants to really buy the top. Maybe some people who are greedy and don't know how to wait in line want to jump the curb and go ahead and do what they do. But you know, buying over here, for me, Bitcoin is trading at a premium, and you can argue that in all the previous instances when if you were to apply the same philosophy, you would be missing out on potential gains over here. But you know, I have been in this business long enough to know that all that talk, all that previous whatever is all a fluff. What never failed is a systematic approach to assessing markets in a way that accounts for the fact that history repeats itself and people never change. Sure, there may be AI technologies coming in, but for the most part, you're always going to be stuck with the do what works and what doesn't wisdom here. And that's a good thing, because what works is you can expect people to to show their best at all times. People are awesome. And so you see that reflected in the charts. But what we shouldn't be expecting is some sort of intellectual, logical progression to all of this, where it's like, you know, the ceiling is invisible. It's never there. Right now, the ceiling is this green box. Forget about all those other levels. First, let's overcome this box. And if we do, that opens up the path to 140. But we can't simply act on it now, because if you study risk management, and everybody throws that word around like it's no thing. I actually teach and consult people risk management affairs based on their portfolios, what is needed, what to reallocate to, and stuff like that. Altcoins. This is something that I do in my consulting, my CR analytics firm. But you're not really looking to buy over here. Let's just put it this way. And so right now, like I said, on this weekly time frame, we're going to drop it down to weekly. We can see how I'm taking you step by step through everything that everybody else sees. You can see how this is a developing CPR situation. We bounced away from it, and we're sort of in progress now. A few more candles that are in the making. A little bit difficult to reverse from here, but it is still bullish structurally, and I think many analysts would agree with that. However, behavior-wise, so structure is bullish, but behavior-wise, sentiment is damaged. It's very easy to scare traders away from charts when you have a 20% drop, as in classical terms, a retracement that is between 20 to 30% on the close means winter is here. This is the official bear market. This price consolidation here, we're at the tip, and I would argue that we still have some ways to go to the downside. So, like I said, just zoom out on the buying if you can for now. We have another level that I'm personally waiting for at 73. This would be a weekly time frame, and you kind of have a buffer zone between here. This is roughly a $20,000 range, which, you know, since this is a live stream and I don't have to be so concise and worry about time too much, I'd like to show you a couple of things over here, just to kind of frame your understanding, or like let it serve you as a reminder of what this means for you going forward. So how do we use magnets over here? Let's use a magnet. I'm gonna go back to, excuse me, the top of this candle and draw a pullback. Yeah. So look at that. This is roughly 20%, right? Let's check it out. 20%. Okay. Now, from the perspective of someone who had lost 20%, for example, if you're one of the guys who bought over here, let's just roughly say, and they retraced by 20%, you're down 20%. Let's say you put 100K, you're down by 20. Now, in order for you to recover from here. And if you bring this all the way back up to here, you see that the number has changed. So again, from the bottom of this wick, we had 19 down, but if you look from down up based on price, this is for you beginners out there if you're watching, you're looking at 24, almost 25%. So basically, if you were to lose 20%, the same distance to the upside, for you to make money, you would need to make 25% to be at break even. And Box, one of our great traders on Discord, had a little post about that a while back, doing a mathematical breakdown of what percentages mean. And this is basically a visual representation of that, where you have a pullback, you lost some money, now you need to make that amount and then some in order to break even. So in other words, here, when something like this happens, it is much harder for price to recover than for it to go down. This is why the spill happens quickly, abruptly, but going up is steady, but it creeps, but eventually it exhausts. So 2 points of exhaustion happen when you have a structural design of price that looks like this, little creep. Actually on NASDAQ, which by the way, I passed 2 evaluations. I'm working on the payout right now. I have a pro account. I'm working on that with Take Profit Trader. It's been a journey, guys. I got liquidated twice, or rather stopped out. So I lost a couple of $100 on my journey there. But I learned a lot, and I can't wait to share that. But that will be in a separate video or inside of our Discord, because it's a bit more personal and direct to those who want to learn how to handle futures. But in futures, you see this a lot, where price starts to creep up during Asian sessions, for example, and then you have an immediate flush out like this. So this is a characteristic of a bullish reversal, where bulls, they take the stairs, remember, and bears, they take the elevator. However, this is not sustainable, and neither is this. So philosophically, when you apply this principle of, okay, 20 down, need 25 up, in your mind, I want you to picture this diagram over here. It looks terrible. But realize that when you're facing price action that grinds against the baseline like this, you will most likely have machines take profit in this manner. But also when this happens, and it's extremely sharp and abrupt, kind of like what we saw over here, you will have an immediate reversal, because it's also not sustainable. Now, this is for intraday traders who need a framework to understand naked price action before using any of the systems and indicators, just like the overall psychology here. Little shaky, this is not confident, boom. Also very scary, not confident, but people step in, buy, and then when you're at this midpoint over here, this is your midline. This is a beginning of a trend where price will choose a direction. Now from this point, this inflection point, if we can do this, then the trend takes on a different shape and form, and the intention changes. In most classical scenarios, they would tell you to look for a higher low, but this is exactly what we have done classically over here. And so that was the take. So now we're on the weekly, and I'd like to bring your attention to a monthly setup on all of our parameters here on the DSR. And this is what that looks like. Now what that looks like is the beginning of something bigger, much bigger. Two things. We have cleared, again, what we're waiting to happen, 94K, on the monthly time frame will look like what we have witnessed on the weekly time frame relative to monthly CPR. What we're waiting for on the yearly CPR relative to monthly time frame is yet to materialize. And so over here, we dipped into the previous monthly open 1, monthly open 2, and we have one more sitting at 94K. And that 94K jives very well with that yearly CPR open. So you'd be wise to wait for that level. As unbelievable as it sounds, you might actually get there. Now, whether you should be buying there or not, don't ever wait with the limit order unless you know what you're doing, blindly thinking that that's a good level to buy. You need to see that it's a good level to buy. And the way you see it is when you can see that everybody else thinks that that is a good level to buy. Because as much as we like to compete with one another in this space, we need one another for consensus to understand where good trading opportunities arise from. And that is groupthink. If everybody thinks that that is a good level to buy, and it actually shows on the charts, and the algorithms start to pick up on patterns based on indicators, based on sophisticated algorithms, then that is where you blend in and say, yeah, me too. There's the market is the only place, I would say, where you don't want to be by yourself and solo. You need others. You need a team. Trading is a team sport. And this was illustrated by the winning team of the 2025 WSOT. There's a trading competition on Bybit that takes place every year or so, I believe. Maybe every 2 years, I'm not sure. I never participate. But kids go and play that game of competing. But one of them came on the show. Shout out to El Morte for the mention, by the way. Stay hydrated, never liquidated. That was awesome. Love that. But yeah, those kids, they go and they play those squid games or whatever, WSOT. But one of them said that this is we sit in our Discord and we all at the same time share our charts and stack them one on top of the other to see if we can reach a consensus. It doesn't matter what your level is, beginner. But this is what made them win. They came out on top because they actually strategized. They had a method to the madness where they're like, okay, we're in buy the low, buy the dip only. If we all agree, there's like 50 of them or something. If we all agree that this is a good level to buy, let's just do it. If there's some divergence in opinions, 50-50 ratio, right? We skip. And obviously you have to be, it cannot just be a bunch of beginners forming a consensus. It has to be people who are really studying the markets really looking at these charts daily, and they have a lot at stake in terms of their analysis. Like me, for example, I better be right about this because my lifeline depends on this. Now, a few trades, if I'm wrong, are not going to change anything for me, but 10, 20, and then you hit a bad streak, that could be bad. But that hasn't happened yet. There are profitable traders and wealthy traders, and there are old traders. But there aren't any old and profitable traders. So you have to make it work while you're here. Don't count on tomorrow. Pay attention to what's right in front of you. So back to the weekly compression. Patience, the ability to maintain a level of attention is also important. You want to be looking at these charts and enjoying the process. You need to allocate some time to it. And you cannot be the jumping monkey that goes from branch to branch, channel to channel. If you're watching this analysis, for example, first of all, thank you for your support, because it feels great to be able to talk to somebody and not to a wall when doing this here online on this YouTube channel. So that is awesome. The second thing is try to challenge these ideas, and don't get too mixed up with what everybody else thinks, because the levels that I'm showing you are do or die levels for Bitcoin. And speaking of do or die, we're now transitioning into the next phase of analysis here, which is the consolidation / bearish phase to the downside on the weekly time frame against monthly CPR. Now, monthly CPR, let me get rid of the drawings. Again, 94 level jive, weekly and monthly line up. Keep that in mind. Weekly, yearly and monthly line up. Now, the weekly time frame against the monthly CPR over here. Since we had this clearance of these two levels and they're too close together, I would count this as one. And this is why we had such a huge reaction here, because there were bid orders resting on this ribbon. I think we might be retesting the ribbon one more time. And like I said, 94 is looking like just looking at this guy over here, the open, this is the breakout point. Once again, a full recovery and a breakout point. And so it would be good to retest that. If not, the volatility assessment till the end of the month here, we have, this is 1, 2, 3, 4. We're in the second week. We need 1, 2, 3 more candles, right? 3 more candles to have the next weekly breakout based on the CPR. So the monthly CPR is extremely thin, and this just means that contraction is going to cause price to do something special here. Now, in my Discord channel, I have warned you probably a week before the actual dump happened that we shall see, I quote, we shall witness unseen volatility. And that was based on the same assessment that I'm doing right now, based on these levels. However, that compression was so crazy on the weekly time frame, we're going to take a look at it, that all of this was 100% expected and played out. So when you have something that sounds like a trader comes in and he's fully convinced based on information gathering, As a true market spy, that is your function. You gather information. And he says that we shall see or witness unseen volatility. This was unseen in recent times. This candle, as tiny as it looks on the bigger time frames, this is what is meant as unseen volatility. You have not seen anything like it anywhere here. The last time that happened was in 2023. Sorry, beginning of 2024, end of 2024, beginning of 2025. So I would say that this took quite a bunch of people on Twitter and other social media channels by surprise, because while everybody was, stable and steady, looking to continue trading this to the upside, I merely expected a sweep of the all-time highs, and then God knows what from there. But MarketSpy, being said God, showed you the direction clearly very early, and not based on this candle, but intraday. We're talking about daily, and we're gonna drop down a few time frames more just to see what's next. So for me, my understanding is that we come down to immediately your target here. There's two of them. Since the close is going to determine where to from next week, we have to get sucked back up to above 114. If that doesn't happen, there is no continuation to the upside. 114 is the new 118 level to break out of to continue higher up. Okay, that's how it works. For now, your immediate target is the previous low over here, which has been swept already, so I don't know why price would want to go there, but I guess based on the overall sentiment and fear, maybe you can expect that to get tagged one more time. So pivot low here on the monthly is very possible, and I think when we come down to this floor, we might have a violent rejection to the upside to try to retest the actual breakdown of the weekly structure here. Now, I don't believe in structures because for me, every time I wake up, there's a new structure. I get restructured, rewired, and reassess everything. But for now, you're definitely aiming to go to the lower parts of these support floors, and your support is immediately right here. So when price gets to those levels, try to start assessing your bid positioning down there. Or if you're looking for an ask, you should already be trading below these levels anyways. This right here, yellow pivot open. When you see that yellow line, depending on where you are, below it or above it, you simply chase the trajectory in that direction. Yeah. In my opinion, this looks like we're heading lower. But because I'm not crazy to be using the wick as my stop or the local top as my stop, I have to drop down a few time frames lower on the daily and take it from there. And on the daily, we have had so many successful clean setups in the past few days of this consolidation, baseline recovery, retest, drop, and it's just incredible. So you're definitely making money there. There are very few bad apple setups over there. So that's the weekly. The weekly is compressing, and we're gonna blast out of this by the end of this month, November. You better hold on to your butt cheeks because it's gonna be bloody. Okay, so, but for now, like I said, chop chop. Now, back to the daily. All right. And this is what I mean by directionality. Daily. What are we looking at on daily? Well, daily, you're at the beginning of this week. Let's change the CPR back to now weekly assessment. So monthly is brewing, which will spill over to a yearly yearly CPR chart. And this is what the weekly looks like. Now, you're at the end of the week, start on Monday, Tuesday, and this rebound, basically, there were so many profitable setups here on Armageddon within a day, but this is a daily chart against a weekly time frame. Two things are happening here. Number one, compression between the EMA ribbon here, 1 and 2. So price is going to be bouncing here. You can bet on it. Okay, that's number one. Number two, you are close to your bid zone once you sweep these lows over here. All right. Once you sweep those lows, if you're able to actually hold on the Ranger level over here for the week, then you can bounce from here. And this is where the Ranger comes in, because you might think that, there's nothing that's holding price right now. If you were to look without it, you'd be like, yeah, what am I really doing here? But the Ranger kind of tells you, like, look, you're sitting right on support right now. And this is why the compression is a real thing, because it's a bunch of things that are stacked on both sides like a hamburger that's not allowing price to breathe. And so it's boiling in there, and it's going to make its move soon. And again, this is to the downside. You're below weekly, so currently, if you were to trade this daily, you're profitable based on the structural open of the weekly. Open, it goes up, you follow price. Open, it goes down, you follow price. We're sort of in the middle of the week right here, so there's no point of talking about this trading setup, but I just wanted to cover this for your sake, so that you don't miss it in the future. And now finally, the one that we've been waiting for is drop down to daily. And for this, we will use our for our chart right now. And here's daily. Daily setup is the same. Raise your hand up or drop a little something in the P&L wall for all of us to enjoy, because closing below this level, as wiki as it is, you have your trailing steps. Ever since the creep up over here, you had a successful top. I mean, what am I really explaining here? Take a look at this chart, right, relative to DSR. Clean, very clean setups. You could be taking these all day long. Now, another one is brewing. In a couple of hours, I would say about 4 hours from now, you should be looking for a new setup. I know I will be. And about 4 hours from now, you'll get a new open on the day. You'll stay on your whatever time frame of choice. Could be 4, 1, or 15, and just take it from there. Just remember, when you're above these yellow lines, you're looking for MSX and Armageddon to support a buy thesis. What I mean by that is, if you were to overlay this with Armageddon and say there's a baseline reclaim and you're above the yellow line, and there's a couple of pyramids, for example, shooting from the bottom up, and MSX is curving to the upside, it is 99% guaranteed that price is going to go up. Now, something that I'm going to talk about when we transition over to futures in a few days is leverage. And that I believe that when it comes to leverage and good chart setups, that you have to find a trade set. So you skip like 10 of them, but you find one that looks absolutely clean, and you see some other traders in the market that are backing you. That happens. They come in, they start trading capital inflows. You want to leverage up and you want to exit very quickly to make up for so instead of holding your trade for a very long time and stressing over that, you could be in and out on a good setup like this very easily, very quickly. And once I'll actually demonstrate how that works on futures because it's a bit more liquid, and so you have to wait even less to get to where you want to be, because futures, they force you to use leverage anyways. You're really locked in on leverage. It's not as granular as crypto. Crypto gives you lots of flexibility. So when people are getting liquidated in crypto, it really makes me question their purpose, because there are successful futures traders who maybe they lose their accounts here and there, a couple of $100 every once in a while, but especially when it comes to prop firms. I'm talking about specifically prop firms recently, as I have been evaluating and testing those. But yeah, you're locked in, and you have to use leverage, and the trailing drawdown is an amazing thing that you can take advantage of. It seems predatory at first, but I have my reasons to believe that that's a really good thing to have. And so I'll go over that in the next video update. But yeah, once you establish directionality, and for that you need Armageddon, you need MSX, and you need to see the levels. Well, CPR, you can just kind of download it for free and sort of see the same thing. Not really, but there's a little sauce in here of our own. But a very, very easy way to understand where you're going on the day without having to guess. All you have to do is skip the first few hours of the CPR open just to see, or you can participate. You can participate using a stop. Tactics should be out anytime now, our trading terminal, and that thing just kind of gives you a proper understanding of how much leverage you're allowed to be using in order to only risk 0.1% of your account. For example, if you're just starting out, you just dial that in, and you're like, I don't want to lose more than 0.1% of my account, and it just does the rest. And it tells you, like, well, you're not gonna make much money because you're not risking much money, but you are going to be profitable based on this MarketSpy setup. And so participate in those daily. You don't need to stress about big wins. The big win, see, a trader's life, guys, and the regular job has a guaranteed payout at the end of every other Friday or every Friday or whatever. This doesn't. You could be high and dry for 2 months, analyzing, waking up in the morning, doing your stretching routine, watching all these charts, but then catching that fish once. When you cast the net and you catch one of these big moves. And if you look at this chart, they happen every few days. They kind of brew into these moves every few days. And they always move in the direction of the pivot open for the day, for the week, or for the month. There's no exceptions. It is the absolute best pivot system in the world. There's no other precision levels or anything like that. You need directionality. You can leverage that. You can leverage against that directionality and get away with some really profitable trades. Every day? No. But sometimes when you have compression, when one of our members comes in and says, guys, daily is compressed as hell, or when I come in and say, you are going to witness unseen volatility because look at the weekly setup, it is so compressed. All you have to do is wait for one of these green or red boxes to break, and there's no going back. Price is gonna keep sliding or riding, depending on whether it's a breakout or a breakout to the downside. And that's it. Right now, though, these are the parts where, as we fall, I have this rule that I always teach my traders. I say, if you look at this pivot open, if you look at your MarketSpy Armageddon. If you look at MSX and you see that you're not really short from here, there's no reason for you to be short at this level right now. Absolutely not. So you have to wait for a new reset setup. Buyers may step in over here. Now the Asia's gonna wake up, you know, and they're gonna start bidding because in their eyes, they see a sell-off for a couple of days now. Yesterday, today. If you know how it works within that weekly time frame, we have 2 days up, 2 days down, 2 days up, 2 days down. So they're gonna come in and start bidding right now. And guess what price is going to do? Price is going to go and retest the high probability level at CP and this one over here. And it's so thin that if it breaks above it and gets into this ribbon over here, then we might actually see a relative higher low being posted here. So this is your intraday setup. It's not all gloom and doom because what happens on the daily stays on the daily. That assessment on the higher time frames that we just did, that is for the back of your head, so that you're smarter than your average statistical trader. Okay, so that you're a little bit ahead of the curve, so you understand where you are realistically on the charts. But how you trade, these are the kind of setups that you're looking for. Baseline reclaim. And when you see something like this, right, and a pullback, now this gives you lots of flexibility here to maybe capture this one little zone over here with high leverage using a very tight stop loss for a trade that looks quite honestly pathetic and not worth creating content for for most gurus out there. So it will look something like this. But man, this is a tight stop. This is high conviction. This is something that you're ready for, and you can definitely make money, but you have to wait for it to happen. You cannot be bidding now. You have to wait for that daily open. You have to look if there's a flippening happening, and that is a possibility. So the levels are extremely thin, but overall, remember, you're in the bearish downward trajectory zone. So any one of these flips, any kind of resistance, you have to be taking profit on time. This is not a holding game. If you want to hold, play hold and poker. All cards on the table here. There's nothing to hide. The charts don't lie. So that's it, guys. Thank you for your time. Thank you for tuning in. Much love. If you're studying these charts with as much passion as I do, please tune in every other day. I'll be here for it. And I'm working on tactics, a couple other things. And you guys should be able to have this whole thing sorted by the next couple of weeks, where everybody gets to play with big boy toys. Tactics is let me know in Discord. There's a special channel that I have created, and I'm going to start onboarding people to beta test, or maybe I'll just release it to the website and you'll be able to download it from your dashboard and take advantage of it in this way. So everybody can be a beta tester. I'm not a, we'll see. But yeah, talk to me if you have any questions through a DM, either on Discord or Telegram, and like and subscribe. I'm just kidding. I know you already subscribed, so thank you for that. Alrighty then. Oh yeah, bearish scenario. Yeah, if this little orb, before I sign off, bonus, if this little orb fails to break above here and fails to do the chop, and it continues lower, based on the thinness of the CPR breakdown, expect the low to get retested. That's all you need to know. Like, this is actually going to maybe come down to 101 again, because you have the official crossover over here. So may as well continue falling lower. I'm ready for that. I actually want Bitcoin bear market to happen already. No offense to you holders out there. I just think that my strategy is a lot smarter than just holding stuff. Holding eggs. Imagine you drop that basket. Crack. There goes your portfolio. But yeah, stay Warren Buffett. Get some dry powder. Sit it out. Wait for these setups. Play little by little. Do your work. Enjoy your hobbies. Stay hydrated. Never liquidate it. That's how we do it. I'll see you guys in the next stream. Thank you so much and have a great one. See ya.